Welcome everyone, welcome to the chat. So for the sake of those who are beginners, we are going to take less than a minute to explain what we have here right in front of us. These are called candlesticks, and as you can see, price rallying up, creating series of lower highs, higher highs, lower highs and higher highs with a cluster of green candles. Let us mark the green candles. These green candles, they signify buying pressure, while on the other hand, as you can see, price rallying down, creating series of lower lows, higher lows and lower lows with a cluster of white candles. These white candles signify selling pressure. These white candles signify selling pressure. Meanwhile, a candle that is neither white nor green, like this candle, it signifies indecision in the market. Now back to the business of today. If you must swim with the sharks, you must be ready not to bleed. So in this market, if you want to get involved, because whichever strategy you use that is profitable, I can bet you it is an institutional strategy, and that is what we teach right here. So in this 100% winning strategy, we are going to be employing two tools. We are going to be employing two technical tools. The first technical tool we'll be employing is the support and resistance. Now, why is support and resistance useful in technical analysis? Why is it useful in trading? The reason being is the fact that the importance of support and resistance cannot be overemphasized, neither can it be looked down upon. They are important zones in the chart. The support serves as a foundation for price to jump up, while the resistance serves as a decking. It serves as a decking to mount pressure on price and push price down. And where are these zones? Where are they located? They are located on every part of the chart, every part of the candlestick. However, there are important zones of support and resistance that we must look out for. They are in the daily high and low, weekly high and low, monthly high and low, quarterly high and low, and yearly high and low. However, for this swing trading strategy, we are going to be looking at the monthly high and low. So now, what happens at these zones? For an example, we are going to be marking out the support of the past 3 months, and let us see the reaction of prices there. So now, for this particular month, this was the support, this is the low. Let us mark it out with a red line to take examples. We are in the month of May. Let us mark the support of the month of April, and see that for the month of April here, and let us mark that for February. You can see that of February right here. So now, these zones, why are these zones important? These zones are important because for each of these months, this support that we have marked, this low, for each of these months, these are the points where we have the strongest buyers. You can see that the price that closed in here, you can see it is a buy candle. These are the zones where we have the strongest buyers. You can see the one that closed here, you can see it is a buy candle. These are the zones where we have the strongest buyers. So whenever price is approaching this zone, price does one of three things. Note this down. Price does one of three things. Either the zone holds, either the support holds, which is the foundation that pushes price up. That is the first reaction price can do in this zone. What is the second reaction? The second reaction is either price breaks it impulsively. Now what do we mean by price breaking a zone impulsively? That means that once price breaks this zone, you can see as price broke this zone, is not impulsive. This is not impulsive. But you can see that once the low of March was broken in April, price broke it impulsively. And the reason being is the fact that we have more than the close of two candles. We have, you can see this particular candle here, this is the first close, this is the second close, and this is the third close. So price has broken this particular support impulsively. And what happens when price breaks it impulsively? It means that this zone is now a resistance, so this support is invalidated. I hope you are with me. So what is the third reaction? The third reaction is either price breaks it in a liquidity manner. What do we mean by liquidity manner? It means that if price breaks it without having more than the close of two candles, you can see when the support of February was broken in March, at this particular zone, price did not break it impulsively. Price broke it in a liquidity manner. You can see we have just one close here. This particular candle closed within the range. So whenever price breaks it in a liquidity manner, we have new buyers introduced. That's why you can see in this zone, as price broke it, price went up a bit before it began to retest this support. So once price breaks it in a liquidity manner, price tries to find a stronger support. So now for this strategy, where we are going to be focusing on is to look out for a critical support zone like this low here. Then we wait for price to break it in a liquidity manner, not in an impulsive manner. If price breaks the support in an impulsive manner like this, we ignore such setup. But if price breaks it in a liquidity manner, then these two rules are met. The first rule is to look out for a critical zone. The second rule is to wait for price to break it in a liquidity manner, which is met. Then what is the third rule? We are going to go further on that. So now let us look at resistance zones as we have looked out for support. Let us take example for the resistance zones. Now we are going to mark the resistance of last 3 months as well. Let's mark 4 months. So you need to be very attentive, because without being attentive, you are not going to gain the most you are meant to gain from this lecture. And I can bet you that if you practice on your own, if you get all the clues and put the puzzle together, success is yours. So let us mark them. Even though they are not broken, you can see that price is in a clear downtrend as each resistance holds. And I've told you what price does when it gets to a support or resistance. Price does one of three things: either it holds, either it breaks it impulsively, or either it breaks it in a liquidity manner. So once you know that nothing in the market will be of surprise to you, you would have known what to expect, and that's what makes a professional trader. So now, as we have said earlier, once price gets to a support or resistance, it does one of three things. You can see price approaching in April, you can see price approaching the resistance of March, and what happens? You can see that it held, price dropped further. So that's what we mean by when a resistance holds. But you can see here that when price gets to this resistance, it breaks it in a liquidity manner. We don't have more than two close here. And as advanced traders, because it will be easier for advanced traders to understand these terms we are using, so you can see in a liquidity manner what happens. New sellers are introduced, stronger sellers are introduced, and price drops. However, if it was broken impulsively, reverse would have been the case. Let us look at the resistance here. It was broken impulsively, and you can see that. So you can see this is the resistance here. and when price got there, what happened? You can see that we have more than 2 close beyond. You can see this is a close, this is a close, this is a close, and price rallied up. So once it closes more than 2 above, it becomes a support, and you can see before price made a new resistance. So those are the 3 case scenarios. The first case scenario, price breaking it impulsively. The second case scenario, price breaking it in a liquidity manner. And the third case scenario, the resistance holding. So now we have perfectly understood the 3 case scenarios when price gets to a support or a resistance. So we should not be surprised by whatever reaction price does at these zones, as we already know what to expect. Nevertheless, our focus on this strategy, it will be when price breaks it in a liquidity manner, because when price breaks it in a liquidity manner, if price breaks a support in a liquidity manner, price tries to introduce new buyers, and if price breaks a resistance in a liquidity manner, price tries to introduce what? New sellers. So now we have this support here, and you can see it was broken in a liquidity manner just by this week. So the support of January, as we got February, price spiked with a week, and you can see price jumped up. So now the 2 rules have been met. The first rule, a critical support or resistance, we have a critical support here. The second rule, the critical support or resistance broken in a liquidity manner, we have the second rule met here. And now what is the third rule? The third rule is that we need an engulfing candle within the month. Once it has been broken in a liquidity manner, then we need an engulfing candle, and right here we can see an engulfing candle. So once we have this day that prints the engulfing candle, this is a classic engulfing candle. What comprises of an engulfing candle? An engulfing candle is made up of 2 candles. The first candle is a sell candle, which indicates that sellers are strong in the market, and the second candle is a bullish candle that totally embodies and engulfs this candle with buying pressure. So this is the first candle, this is the second candle. So we can see an engulfing candle here, and once we see this, it must be in the particular month. It should not be in another month. It must be in the particular month. Immediately after price takes this out in a liquidity manner, and you see the engulfing candle, then you scale down to the lower time frame. You'll be doing that on your own, and you look for entries. However, if you are too lazy, you can't scale down to the lower time frame to look out for entries, you can refine the engulfing candle. So when we mark it, you refine it by 50. You mark 50% of the zone, and you wait for price to retest and go up. And if the 50%, if the stop loss is too wide for you, you go to a lower time frame to refine. We have a video on refinements. You can do the needful to check it out, how to refine another block. So you can see once price retested this zone, price jumped up. So the strategy is that simple. Then you hold the trade for days. You can see hold this for 1, 2, 3, 4, 5, maybe a week before it approaches to your take profits. So we are going to take more examples. So this strategy is particularly very good, and it works well on the major pairs like the Euro USD, AUD USD. I have a video on the best pairs to trade. You can check them. So right here on Euro USD, we can see this critical resistance, which is the first rule. We have a critical resistance, and the second rule, the critical resistance should be taken out in a liquidity manner, which is met, not more than the 2 candles close above. And the third rule, we need an engulfing candle. Here we can see a bearish engulfing, and what do? You scale down to the lower time frame to look for entries. And mind you, this is the first rule, critical support or resistance. Second rule, taken out in a liquidity manner. Third rule is what? Third rule is the fact that it has to have an engulfing candle within the month. And there is a fourth rule, it has to be during the middle of the week. So it has to be during what? During the middle of the week. And you refine, you wait for price to retest the next day or whichever day during the month, and you expect price to drop. We are going to take more examples. Once you master this strategy, I can bet you is the bread and butter. You don't need it. You don't need to disturb yourself. Here we can see a critical resistance. Price takes it out in a liquidity manner. An engulfing, bearish engulfing is printed within the month. You wait for a retest and price drops. So you can see once you retest, you hold for days 1, 2, 3, 4, 5. So that's why it's a swing trading strategy. And position traders can use it as well. So mind you, you can see this particular support. How does price take it out? Price takes it out in an impulsive manner, so we ignore such. You see, you have 1 close, 2 close, 3 close. You ignore such. Don't force the chart. If price takes it out with more than 2 candles, even if it is 3 candles, it's an invalid setup. Ignore. You can see this is a critical resistance. Price takes it out in a liquidity manner. And what do we have? An engulfing candle. We find 50%. Wait for the retest. We find 50%. Wait for the retest. And kaboom. Price drops. You set your stop loss. You set your take profit. And price drops. Here we have a critical resistance. Price takes it out. This one close, 2 close. So just 2 candles close here. This one closed inside the range. We have an engulfing candle. We mark 50% of the zone. So to mark 50% of the engulfing candle, it is the first bearish candle you mark. First bullish. If it is a bearish engulfing, is this bullish candle you put in the box, then you mark 50%. Wait for price to retest and price drops. So it isn't complicated at all. And it should be during the middle of the week. So those are the 4 rules. The first rule is met, critical support. Second rule, taken out in a liquidity manner. Fourth rule, engulfing. And third rule, engulfing. Fourth rule, mark 50%. Fifth rule, it has to be during the middle of the week. You can see here we have the low from last 2 months taken out in a liquidity manner. Right here we have an engulfing candle. We have already marked 50%. And price, it was clean everything out and remark it so we can see. You can see it mustn't just be the low from the previous month. It could be last 2 months. You can mark the low from the last 2 months and see how price takes it out. So you can see this low from the last 2 months. Price takes it out in a liquidity manner. You see we have just 1 close. We have just this sell candle closing here. This closes within the range. We have an engulfing candle, which is the third row, and the fourth row, it has to be during the middle of the week, and you mark 50%. So these are we mark the 50%. If it is a bullish engulfing, you just mark the bearish candle to the week and you put this right here, mark it. You can see it was the last day of the month that our price retested and price began to rally up. Let us take more examples. Here we have it. This is a failed pattern. This pattern did not hold. So all we have in this strategy, and as we are back testing and seeing the reaction of price, it is to give us a framework. It's not that when you get into the market it is 100% or 1000% it must happen, but you already have the framework in mind. You can see this is the resistance from last 3 months. Price took it out in a liquidity manner, and we have an engulfing candle during the middle of the week. Let us remark them. And see, not more than 2 close. close must not be more than 2. We have just this candle closing above, this closed inside. We have an engulfing pattern here. Mark 50% of the engulfing pattern. We expect price to retest and drop, and that's exactly what happened. So no need to make trading difficult. It is very easy. Here you can see price took this out in a liquidity manner. We have one close, two close, this close within the range. We have an engulfing pattern here. We have an engulfing pattern here and wait for the retest. So let us look out for all our rules. A critical support. So let us look at the reaction of price in the critical support. If the support holds, we ignore. If it breaks it impulsively, we ignore. But if it takes it out in a liquidity manner, then we keep an eye on it. So you can see price takes it out in a liquidity manner. So what do? We keep an eye. And you can see when the month was ending, we have the bulls in this zone, and we mark 50%, and price rallied up. So months in, months out, those are the principles that price follows, and it is so simple. Yours is just to train your eyes to spot these patterns, mark the chart on your own, carve your rules. In fact, rules that are strict. Keep to the book, follow your rules judiciously. So you can see as price breaks this, the engulfing pattern just formed. Beautiful engulfing pattern at the beginning of the month. You can see you mark 50%. It has to be at the middle of the week. You can see as price retested the zone, you can see price rallying down. You can see price rallying down. So it is that simple. It is that simple. There are countless examples you can look out for, as these things they happen every month. You just have to be patient and wait for them to play out. Here we can see a critical support broken. You have an engulfing pattern here. We refine 50% of the pattern. Mark 50% of this block. Once you have a 50% marked, you wait for price to retest, and you can see once price retested this day, 1 2 3 4 5, price went up. So at least you should have made what you can make before price came back down here. So it is that simple. You don't have to make anything difficult by yourself by over analyzing the chart or whatsoever. Just make sure all rules are met. Once all rules are met, then you trade without hesitation, reservation, or fear. So the most important rules we have highlighted. Here we have this support broken. You can see which is first and second rule are met. Critical support broken in a liquidity manner. Then we have the engulfing pattern. We mark 50% and wait if price is going to retest, and you can see what happened. Price retested and price went up. So on your own, sit down with the chart, mark the chart, mark important zones. Should be during the middle of the week. Here we have a critical resistance. It is taken out in a liquidity manner. Then we look out for an engulfing candle. We have an engulfing candle here. We mark it. We mark 50%. So just for us to be very, very good and versatile with this system, that's why we are marking as many examples as possible to shape our knowledge, to foster good habits. Because as a trader, once you stop studying, then you stop growing. It is that simple. So mark 50%. See price retested 1 2, so price dropped. So it is that simple. This is a concept for swing traders, framework to follow, methodology to stick to, and a success formula that is assured. You can mark the chart, mark as many examples as you can, train your eyes. You can see this particular one, it was broken in what, in which manner? It was broken in an impulsive manner. You can see the number of close we have below. So you must be watchful of how price breaks through, because it is as important as you can think of. Because if price breaks it in an impulsive manner, you ignore such zone. Not that price breaks it in an impulsive manner, then you still go ahead and start looking for the other block in the direction. You are doing what is wrong, and you have very wrong results. So you can see here it's broke it in a liquidity manner. We have an engulfing pattern here. We mark 50%. Once we mark 50%, we wait for a retest, and on the retest you take your entry. So it is that simple. It is well simplified, and I guess with the amount of examples we have taken, that should have nourished our knowledge enough. We have taken good examples. We have taken examples that do not meet the criteria, and as I have said, never ever force the chart. Nothing good comes out of it. When the market is ready to give you your pattern, and see this, you might be tempted to force such charts. You shouldn't. This price broke it in an impulsive manner. You can see we have 1 close, 2 close, 3 close, so it is already invalidated. You don't have to bother yourself on an invalidated setup. So there are so many examples you can take. So many examples that can be taken, as much as you can think of. Here we have a critical resistance, and you can see how price takes it out in a liquidity manner. We don't have more than 2 close here. This is the only close we have here. We have an engulfing candlestick pattern here. We mark 50% of the pattern, and once we mark 50%, wait for price to retest. You can see, now mind you, the retest has to be within the month. Once price retested, you can see price dropping. This is the 50%. You can see that's the exact place where the price retested, and once price retested, the price started to drop. price retested and price started to drop. So it is that simple. So plan your trade your plan, and most importantly manage your risk and emotions. If you find this content useful, like, subscribe, share and follow for more. See you on our next lecture.